All right, here we go. Highlight, middle of the week, not as volatile as yesterday. You got to watch other markets. If you're trading the S&Ps and you're not watching the bonds or the Japanese yen, then you're not trading the S&Ps. Fear has been the motivator. Bonds go up, stocks go down. Bonds go down, stocks go up. There's not always a lead lag, but sometimes there is. It could help determine your opinion. I want you to look at this. If you could just pick this up, you know more than 99% of traders. Do you see this trajectory? Do you see this trajectory? So it's not ready to go yet. And you got to be patient. So then you let the market dictate. All right, look. Ooh, now it's coming down. Are the S&Ps going up? No, they're not. That gets me a little.
Can be characterized as a pandemic.
Someone just used the word pandemic. Someone, don't know who the guy is, if he's with the WHO, but we're actually not breaking on that news, coming on during my highlight. Keep an eye on this. S&Ps are at the bottom here and the bond prices are at the top. This is just what we had talked about at about 9 o'clock this morning. If you take a look at this move, right in here, the problem with these charts, is that the bars are so scrunched up that they don't look like a big move, but they are. This move up right in here, and I was quoting it. See when it went 12 to 17? Now, it didn't jump 5 ticks, but it went up 5 ticks quickly. If you were bearish, that was your win moment. We talked about it to take out the bottom of this box. I think we also had shorts that puked, but that's another story and another screen. But what was key to this trade was this uptick in the bonds to get a head start in the S&P. All right. And you could see this in real time when we talk about it. And if you just look at the right, boom, when it goes up like that, let's go like that, up like that, down like that. Look at this up here and this down here at the same time. When you get upside in one, you get downside in the other. All right. And not only could it give you the ability to get short with a little bit of a head start, because this is weird. This doesn't look like a big move. This is 10 handles here. This is 10 points. But if you're bearish looking to get below here, all right, and you get the bonds to jump 5 ticks out of the hole like that, that's important. And I think another thing I had said to people during the time was, boom, when the bonds did that, look right here. When the bonds did that, to get to think of covering if you were short, because we were due for a little bit of a bounce. And we did, and we bounced about 7 points. So then you could see them continuing to smash the bonds, right? Continuing to hit the bonds. And for some reason, the S&Ps couldn't go up. When you get a break like this in the bonds, and maybe you're buying it, trying to get it to go up, you got to get out, because as soon as the bonds turn around, boom, that's going to happen. So if you don't learn anything from trading, learn that when there is fear, you get this kind of downside. Did you get upside? You're supposed to. Why didn't it go up? Why didn't it go up? Why didn't it go up? Probably because it's this
India suspending all tourist visas from March 13th
week.
to April 15th due to the spread of coronavirus.
And as soon as what happens? As soon as this bond price grabs a bid and starts to go up, and it went up quick, they fall through these 72s. And I think this was probably the highlight of the day for me, was this move right there. This move right there, predicated on the fact that you had weakness in the bonds that did not leak into strength in the stocks. So when you had strength in the bonds, it led to weakness in the stocks. Stocks, bonds, they're important to watch all year. But boy, especially during fear and high volatility and what's next, uncertainty, Sanders speaks this afternoon. He might drop out. I think the markets want to see one-on-one, clear up the uncertainty of having a chance at socialistic policy in the White House. Without that, I think that they could rally. They did middle last week when Biden won Super Tuesday. I'm not really clear on what that means for if he does announce he's out. But I will tell you that you have to anticipate the next tape bomb. You have to anticipate what could happen and come down the wires that's going to rally us. Right now, everything that the government's saying is too vanilla. They need details. That's why we gave back most of what we rallied yesterday. We rallied yesterday because there's a chance at some stimulus. We broke today because what is that stimulus? The markets want it. They're spoiled. They want it. They want to know it quick. All right? So you guys got to make sure you're on top of correlations all year round, but especially during high volume or high volatility moments. You could do a Google search, a YouTube search on intermarket correlations, and you won't find anybody teaching it. You know why? Because most people don't look at it. I tell a story about Dan, longtime room member. Guy's an appraiser. And when I first told him about it 4 years ago, he didn't believe me until he looked at it at home. So if a real estate appraiser doesn't think that comparing and contrasting markets to markets is important, most of the rest of the people who get into this business won't. Even if they hear about it, because he didn't believe me until he went home and seen it. He's been profitable for 4 years using bonds with stocks for good correlation. So you got to make sure that you're selling yourself. I'm not selling you on how important they are. Sell yourself on it. But why wouldn't it work? You value the price of house and cars and plane tickets and even escort services. I don't know much about those, but I think they have a price attached to it. They probably adhere to those same concepts and techniques. Have a safe session. Manage your risk before you take it. You'll have a better chance of managing it. Listen for the Sanders press conference this afternoon. And the trend is not your friend. By the time you recognize it, it's too late. Be careful. First comment of pandemic from someone, and net, they've taken that to be bearish. Not as bullish yet in the bonds, though. Let's look at who said that. WHO chief. Coronavirus can now be characterized as pandemic. Countries on still change the course of the pandemic. So that's net. They jumped and then they cracked it pretty good, but you have to be careful long when that headline came out. The word pandemic first used from the WHO. That's the organization that could call it that.